G'day, welcome to 2016's first video for the year. We can't help but mentioning that the market, since we got back after the new year, that the markets have gone to a tailspin. It's been essentially a one-way direction from what was coming up close to 5,400 down to 4.9 as of yesterday's date, the 20th of Jan. Now there's been lots of noise around there's a manufacturing report out of China which has really spooked the market. We've known that China has been slowing for some time. That's affecting commodities. So countries like Australia, we are really feeling the heat from a commodities point of view. That's the same for Canada and also for Brazil as well, the big commodity countries of the world. Then on the oil and gas side, that's really affecting us as well, where we've got demand is falling and supply is increasing as a lot of these gas reserves are coming online, and then you've got OPEC that aren't cutting supply as well, so that's really depressing the market with the old supply and demand. But regardless of what the noise is or what the story is at the time, corrections like these are quite common, and we've seen them regularly. Most people, you'll ask me, what do I think is going to happen with the market over a short term? I have absolutely no idea what's going to happen with the market, and but it's time like these is where businesses, and when we talk about the share market, we are talking about an auction room where we can buy and sell businesses. So when the market has gone down like it has, it means that we can buy very high quality businesses at cheaper prices. So for me, this is a perfect opportune time. But what I wanted to give you now is really, you've got three options to do in markets like these, because they can become quite emotional times, and it becomes very worrying when you see your investments and your shares go backwards. So I'll go through the three options and let you know what we're doing. So this one's more about having some clear instructions on what you can or can or can't do. So one option is you can panic, and if you panic, you're going to sell. And as a general rule, we've all seen the graphs that people, as markets go up, people get very comfortable in buying, and as they tend to go down, people get very comfortable in selling, and at the wrong time. So when the markets are buoyant, everyone's making good returns, people start to buy because they think it lasts forever. It never does, goes down, and they sell. So the worst thing you could possibly do in these scenarios is sell your shares in a depressed market. Your other option is what probably the majority do, and most people that aren't watching this video are not that interested in their superannuation and don't own any direct shares, so they're not watching that hard, and they just hold. And there's nothing wrong with just holding. For those that are got regular contributions going to the superannuation, as the markets go down, whether they like it or not, they've got money going into the share markets via the superannuation. So they're buying little amounts, but for the most part they're holding. And of course the other option, and the one that we did extensively during the GFC, we were buying for our clients on a regular basis. And what we're doing at the moment is we don't know from here, we don't know whether the market's going to go up or whether it's going to go down further. No one has any idea in the short term, but we are starting to buy, and we're chipping away at the market, not investing all the money in one hit because I don't know the direction over the short term, but I'm very comfortable that in 5 and 10 and 20 years, that if we buy high quality businesses, that they'll be worth substantially more than what they are at these lowly prices. So it gives a bit of an indication what we're doing. We're looking for opportunities. For those with cash, now's a great time. For those that don't have cash to commit, we make sure we're investing in the right sectors, in scalable businesses that are have low or no debt. So we're holding or just reallocating a bit within the markets, but we're definitely not looking to sell. So Happy New Year, and we'll see you next week.